stuff in technical analysis, because I don't really believe in going into the whole science of like a pattern and then the reversal and then all that crap. Like if you're a new trader, I believe this is all what you need to do to have a bias in the market and to really and to really have the confidence to attack it. I mean, you have to keep it simple. That's the most important thing. So number one is very, very important to identifying a trend, right? So it's easy to say, okay, like, you know what, we're going to identify the trend because, hey, look, price was making higher highs or like higher lows, so the trend is up. Or, hey, look, price is making a lower high or a lower low, so trend is down. Easy enough to say. But when you're looking at the charts, when you're looking at price move, it's just that hesitation. Like you don't know whether it's an uptrend or it's a downtrend, right? You don't know so what you need to do is you need to see, okay, what is the higher time frame saying? Is the higher time frame bouncing from a strong support, or is it rejecting a strong resistance, right? Either way, if it, let's say, bouncing off a strong support on the higher time frame, that means the trend is going to go bullish now, right? And you can see those higher highs and higher lows on smaller time frame. Same thing goes for when the price is bouncing from the resistance, right? You're making lower highs and lower lows. So that means you're slowly getting into a downtrend. But what else we're going to go over is like where to take your targets, like where to see, okay, like, you know what, this is going to be a logical point for me to take profits, or this will be a logical point for me to place a stop loss or take an entry. But whenever you look at a chart, it's very, very important that you identify, okay, either we are bullish or we are bearish. Okay, if we're not bullish or bearish, what's price doing? Consolidating, right? So that's what you need to identify whenever you look at a chart. We're going to go over a couple of examples here in the slides later on. What about the waves? Yeah, waves too. Like waves are like if price is consolidating. Generally speaking, when price is consolidating, I don't trade. I wait for price to break, and then I try to enter. So let's move on to the next one over here. Let's see. Having a bias comes from the same thing. Like if you, okay, so let's say you have identified that we are bullish. Perfect. So price is moving up, right? We're having a bullish run. There's a lot of momentum in the market. We are, let's say, in New York Open, right? So when you're in New York Open, there's a lot of volatility and price really moves. So now, let's say you have a bias that price is moving up, right? One thing is that you cannot change your bias, right? You don't have to change your bias. If you're saying price is moving up, you're sticking with your decision. You're sticking with that bias. It's not like you're going to say, okay, first I say price was moving up, and then when I switch to the lower time frames, you see that price retraces, and so you start thinking to yourself, hey, wait a minute, maybe price is moving down because I took a trade based on the 1 hour, and now on the 5 minute, it's printing a bearish engulfing candle. That does not matter. If you're looking at smaller time frames, those time frames have very weak zones, and those zones will be broken. So you cannot. So if you're entering based off the 1 hour time frame, you cannot look at the smaller time frame and just change your bias. Because here's what's going to happen, and I guarantee you this has happened to everyone here in this webinar, to everybody. What happens is that price is moving up. Okay, yeah, whatever, perfect, fine. You take a buy, right? You take a buy, and then you're looking at the 5 minute and the 1 minute time frame, and the price starts to go down in the smaller time frames. So you start thinking, oh shit, we're moving down because now price is maybe close to stop loss. So you close your buy, you take your first L, and then you take a sell, right? You take a sell. Now price moves in your favor. Guess what? It finds the low, starts to move back up again. Starts to move back up, and what you say? Oh shit, it's actually moving up. You close your sell, you take another L, right? Now you take a buy. So now you're in buys. And the time you take into a buy, it reaches the area where you should have profited in the first place. So maybe this ends at break even or what have you. So that happens when you have multiple biases, and this transgresses into having analysis paralysis, right? When you have two conflicting biases running at the same time. Okay, Javier has a question. Okay, what's your question? In minor time frame market, the market moves same in major time frame, nothing more, need more patience more. Yeah, exactly. So we're gonna go over more. We're gonna go over actually examples to answer all your questions there, Superman Javier, right? So when you have a bias, record that. Now I'm writing in my trading plan here on the side that to stick to my bias. This is part of my trading plan. Hope you guys are doing the same, because this will be actually very, very important. Actually, when I first heard about trading plans, I thought to myself, oh, you know what? Like, it's such a stupid thing to do. Write down a trading plan. I mean, how's that ever going to help me? Right? But it does. It does help you. Because when you go back to your plan and you look at it, you're like, oh, you know what? Only if I followed these rules, this would have been better. Oh, there's a... Okay, how about now? Is the rectangle gone? Yeah, I think it's gone. Perfect. All right. When you have a bias, all you have to do is take action. That's what the guys have talked about before me here, that you have to take action. You have to take action. Because people always talk about, hey, like, you know what, the market is going to do what it's going to do, right? And history will always repeat itself. So how do you make up history? How do you say that, okay, if price is breaking a zone, it will come and retest it, right? So this idea of price breaking a zone and retesting it, where did it come from, right? It means that there were a bunch of people who saw this happen over a number of times. Right? It's not like you try it once, you fail, you try it twice, 3, 4 times. No, it takes 100 different times, right? 100 attempts, 50 attempts, right? You have a bias, you have a statistical record if you do one thing 50 times, right? So let's say you trade breakout retest 50 times. Do some analysis. Yeah, we will do all the analysis later, just because everything is covered. Every question you have is going to be answered later on, right? So, yeah, so like it has to be done 50, 60, 70 times for you to say, okay, you know what? This breakout retest works most of the time. So maybe if I just keep taking action on this, this will lead me to profitability, right? That's the thing. But taking action comes from having a solid trading plan, right? When you have a solid trading plan and you're looking at the market at the same time every day, you start to see repetitions. Javier, these waves, breaks, retests you're talking about, it all comes with looking at the stuff and watching it happen over and over again. Right? I will keep on repeating this because this is the only thing that has really helped me, and that's helped like a lot of people here as well in trading, right? But no matter the outcome, no matter what action you take, you always have to study the result, right? This goes back to journaling, because we can go over all the strategies after this. I'm going to go over identifying a trend, zones, and we have some slides here with examples as well. But I think it's very important to study the result. What I've seen is the amount of people I've talked to, 60% don't, like, let's say you took 4 trades in your day, right? If you took 4 trades in a day, and if you're not going over those trades at the end of the day, you're doing something wrong. Right? Like when we say that you have to treat trading as a business, this means if you're taking trades, at the end of the day, it's your job to map those trades out on the chart and see where you went wrong. Right? If they hit stop loss, you need to figure out why it hit stop loss. Or you need to figure out that, okay, if it did hit stop loss, what did I miss? Is there something I was missing? Because trust me, man, if your trades go wrong during the day, if you look at them again after a couple of hours, it's going to make sense. Then you're going to turn around and say, oh, you know what? This was so obvious, right? I took a bad trade. This was so obvious. right? So that's how you study your results. When you study your results, you start to figure out like, okay, where you're going wrong. Just like you have a business. When you take a loss, you don't do that, right? You study it. You're like, okay, maybe next time I have to have a better strategy to deal with this loss. Same thing with trading, right? If let's say I was so I use a lot of pending orders with USD news on gold, and what I found is that most of the times my pendings on gold will get hit, but it'll end up in a like a 4 or 5 pip drawdown, so that's going to be a loss. So now I know that, okay, maybe putting pending orders on gold during high volatility news, it's not a good idea. So I'm just going to remove that from my plan going forward, because the result is not profitable, right? So it's really, really important to journal your trades, go over your wins and losses. How long this is going to be? I think we're going to be here for another like 2 hours, 2 hours or something, right? So that's journaling. Journaling is very important, guys. Like, I mean, I have people who journal their trades, who take entries, and they send me analysis every day, right? They send me analysis, Alex, Ted, like whoever, like Wakar, the other Alex from Africa, right? They send them analysis and see, hey man, like, look, I lost this trade. Why did I lose this trade? Right? When you understand why you lost that trade, you're not going to make the same mistake again. Because I'll tell you what, Forrest Gump is not going to make that same mistake again. Because Forrest Gump is smart, right? Because Forrest Gump knows he does not need to make that mistake again, because it's going to end up in a loss. Right? So you just need to identify those areas where you're lacking. Let's go to identifying a trend. Okay, momentum. So the market is only going to trend when there's going to be momentum in the market, right? Well, price is only going to trend when there's going to be momentum in the market, right? When there's going to be volatility in the market, right? So when do we have volatility in the market, right? So now if you look at the market as an office, right, run by 3 people, okay? So those 3 people, one is New York, one is Asian, and the third is London, right? So these 3 people, they're running the market, right? So when does New York comes into the office? New York comes into the office at around 6, 7 a.m. in the morning, right? When New York comes in the morning, he starts to work, and there's a lot of movement in the market. So then you have momentum in that session, because that session is like, is working right now. So when New York leaves the market, when does New York leave the market? Like around 3, 4 p.m. Eastern. So what happens? You have consolidation, right? So that means there's no momentum in the market. So there's no reason for anyone to look at a trade, right? Because when there's no momentum, there's no trend. Same thing happens when Asia comes into the market. Asia comes into the market around 7, 8 p.m. Eastern. What happens again? There's momentum in the market again. There's a trend, right? So what happens when Asia goes home and London comes in the market? There's a momentum again, right? So now you have 3 times to trade: New York, Asian, and London. Because when these 3 guys are in the market, there's volatility, there's momentum. And when there's momentum, there's a trend, right? So now you have to choose one of these times to trade. That's it. That's it. You just have to choose one of these times. And when you choose one of these times, you look long enough, you will see trends. And and that's the reason why we have all these live webinars now, because it's another thing to actually to post a chart, say this is what we're doing. But I firmly believe that when you actually show somebody what you're looking at or what things are like, then I think that really enhances their learning curve. And I think we're going to continue to do that. How to identify beginning momentum during market hours, right? So now here, what's going to happen is that you're going to go into more in depth, like, okay, what's the time when there's momentum? So you got to look at it from an office perspective, right? So this is very, very important. So if you're looking at it from an office perspective, it's like, okay, you go into the office, right? You get your reports, you look over the reports, you start working away, and then a time comes when there's lunchtime, right? So let's say you're trading New York, you're trading from 6 to 10 a.m., and then after 10, 11, there's lunchtime. That's why you see these small consolidations in the market, because there's less volume now, like people, all the banks and institutions, of course, they're working, but majorly, like, it's lunchtime. So the market is going to die down now. There's going to be some consolidation. And when everyone comes back, the trading volume increases, and then you start seeing spikes again. Right? So these are different times that you notice. When you're looking at the market every day, you start noticing these events that take place. You start noticing these similar moves that happen. Like, I know from like 12 and 2 p.m. Eastern, they're like New York session almost continues moving. I've just recently started to see this, right? And it's just because, like, you understand maybe this is the time and there's going to be volume. So if I can watch the market at this time, maybe I can catch some part of this volume. And if I can do that, if I can do this 3-4 times a week, maybe in 2-3 months, I'm going to be profitable, or I'm going to start to have profitable trades finally. Because all the shit I've been doing for the last 5 years, learning strategies, learning methods and systems, they're not working. That's why you're here. That's why you paid to be here, because all that shit you've learned, it hasn't worked. Right? Like, I talk to people, okay? So I talk to people and they say that, oh, I've learned hundreds of strategies. Like, fuck, name me 100 strategies. Oh, maybe I've learned 50. Name me 50. Right? Oh, maybe I've learned 10. Okay, yeah, that's realistic. You've learned 10 strategies. They didn't work. Why? Because there was no discipline, right? Think about this. That annoying guy we see on YouTube, that London breakout strategy guy, right? I think he only trades that London breakout strategy because it works for him. If he does that all the time, it works. There's not a reason it won't work, because he does it all the time. Now, why wouldn't it work for people? Because they don't focus on that one thing. They start focusing on 10 other things. Right? So it's a mind shift, man. It's a state change which you have to make in yourself. What is the trend? I'm pretty sure we all know what trends are. Either like there's a trend, either market moves up or market moves down, right? Or market moves sideways. Consolidations. When we have consolidations, we don't really trade, right? Because it's very risky. You don't know where it's going to go. So what are zones? I'm going to cover all this in one long stretch here. What are zones? How long should the trade last? How big is the range, right? How I see zones is where there are wicks, right? If you have a higher time frame, right, and you have price wicking in higher time frame, just imagine these are candles. They're very raw drawing of candles. Right, so price is moving down, and then it's leaving the wicks at the bottom as well. I have a completely separate webinar on wicks and zones, so I'm gonna link that here. So let's say that you have these wicks here. So this is a zone here, right? Because you've seen that, okay, price comes up, it wicks into this area and rejects it. Right? Now, some people would say, oh, we could draw a line. So this is a resistance line, or this is a supply zone, or whatever, right? Yes, Javier, we're going to talk about waves. We're going to talk about waves, right? So I say that, okay, support, resistance, like, supply demand zones, they're all the same thing. It's just these range of prices. Right? When price comes in, it makes wick. It means that price is coming into this range of prices. Like, imagine these are like a bunch of prices here, right? And this zone is, let's say, 10, 15 pips big, right? Maybe this is a 10 pip big zone. So when when price is wicking here, this is like a zone you have. Okay, you know what? Maybe it has wicked here once, twice. So maybe it's going to reject now, right? So this is like the zones you have. Your high time frame zones, they work the best. There's no liquidity from this break. Javier, I have no idea what you're talking about. And yeah, because, right? So these are your zones here. We're going to go over zones here more. Let's see. How long should trade last? We're going to cover this in the second part of the slides. How big is the range? This is also covered in the next examples here. So let's move on to momentum. The momentum charts. Perfect. So here we have the 15-minute chart of on USDJPY. I think it goes through 1 to 1.5 day, right? What I have highlighted here is your Asian Open. This yellow is your Asian Open, right? And then we have a little pause, and then you have your, what is this? 8, 10, 16. This is your London. This is your London Open. And then you have your New York Open. And then you have your Asian Open again, right? So if you notice that before Asian Open, you had this consolidation. Why? Because there's no volume, right? There's no trading activity happening before Asian Open. And when you came into Asian Open, you realize, oh, hey, like, you know what? Now, when Asians are coming into the market, we have some volume. We have some momentum. So if you look at the momentum, look how price, like, you know, it broke out of this consolidation, and the next candles, they did a small retest and continued to fall down and made wicks. So when price is in momentum, you have wicks. These wicks, they get filled, right? Price move down, you can continue to move down. So maybe this was a support to the left, but you see this momentum. But now when Asian session starts to die down, you see consolidation, right? All this consolidation starts to happen because now Asian is going out of the market. And now we have the London Open. So remember when I said that USDJPY, maybe it has volume in London Open? You remember that? Like maybe I said, this is why. Because look, this is 10 o'clock. This is 10 GMT time. I'm not sure if this is the accurate time, but like there's less volume because JPY is closed. USD is closed, right? So there's no volume. There's less volume here. See this? There's less volume. And then slowly as time passes, and if you look at the time, this is a 1500, 1400 GMT right over here. As we come into like pre-New York, volume starts to kick in. You see these big spikes, right? So volume starts to kick in. As the New York session matures, you have a trend now, right? It makes a trend, reaches a support, which was in Asian, and we have a retracement, but the moves are clear, right? And when the session dies, we have low volume. And when Asian comes back again, you have volume again. You have big candles, you have moves up and down, there's volume. And the cycle repeats itself. Then you have London session, you have New York. This was New York here again. So that's how you really gauge momentum, right? Like you look at a chart and identify, okay, if my time to trade is between like 2 and 6 GMT, maybe I'm looking for a portion of a move during that time. And when you look at long enough, you start to see consistencies. Because look, this was Asian session here, right? This is again Asian. Right? So you can see that, okay, maybe 1 and 2 hours in, we have a move. Then we have another move, right? Same thing here. You see, 1 or 2 hours in, you had a move, you waited, and then you had another move, or it starts to go up. So these are the things that you are constantly looking at. You're trying to identify similarities in moves. So let's go to the next one here. I used this in the previous webinar as well, and I think this gives a really good perspective on a weekly on a weekly chart, right? So here you have a 1 hour chart on USDJPY throughout the week, right? So you have Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Friday, right? So these are 2 weeks, right? So when we said that, okay, like, imagine when agent comes into the market, now you have to see it comes into the week. It works the same way, right? Now, most of the times, I haven't really seen a lot of volume on a Monday. Sometimes it does happen, but the bulk of the moves, they happen on Wednesdays and Thursdays. Like Ted says this a lot. I've actually learned this from him, that your Wednesday, Thursdays are your buffet days, right? That's when you have a full meal buffet. Tuesday, you have an appetizer. Thursday, you might have a good dessert. But Wednesday, Thursday are when the bulk of the moves happen, right? So if you look at this over here now, after this webinar, you can open your own charts and map out these days and start to look at the volume profile, right? Now, this is a little bit complicated, but the more you look at it, the more you're going to start to understand it, right? So Monday, we had a little bit of a consolidation, then price started to move, and then I think this was the market close, right? That's when the market closes before the Asian opened. So we had consolidation. Asian opened, there was volume. We had consolidation again. We slowly went into London. There was volume. Went into New York. More volume, up and down movement. But then when we came into Wednesday, we had a lot of volume coming in. We had this big move down, and then we had this big move up, right? There's the same thing. We had a move up, consolidation, and then we had a big move down, right? Friday, it was like haphazard movements, but I think it was it was the start of the month, so it still moved. And then on Monday again, you have consolidation, right? Consolidation, getting ready to the move into the week, right? And then Tuesday came, we had a big move, market consolidated, and then we had a big move again on Wednesday. See, Wednesday, high volume days. Price retraced and did another drop, high volume days. Wednesdays, Thursdays, we had the same thing, right? We had a high volume day. There was still volume, not enough, but there was still high volume. Look at the size of the candles. The size of the candles will tell you how much momentum there is in the market. Makes sense? Size of the candles, that's why they say, hey, hey, I see a bearish engulfing candle, or I see a bullish engulfing candle. So we're going up, of course, but you're looking for a logical entry, right? You're looking for a logical entry. And then we came into Friday. At the start of the Friday, we had some momentum here. I think this was Asian session. And then, we had some momentum in New York, and then price started to consolidate because the week was ending.